Hello, everyone. Welcome to the market update for Tuesday, May the 18th. We're getting a little bit of an indecision in the market, really for the last couple of weeks. We'll take a look at that when I'm talking about when we look at the charts here. As far as the direction alerts, though, well, they're kind of showing the same thing. If you move down, you can see momentum is right in the middle there. We're not overbought, we're not oversold, we're just kind of right in the middle of the range, which adds to a little bit of the confusion a little bit. Like I said, we'll take a look at this when we look at the chart, but the way the market's behaving over the last couple of weeks, it's not really signaling what direction it's more likely to move in. And so that's what's made me very cautious. As you've noticed in the last few updates, I've been a little bit more of a sit on the sidelines, not get into too many trades. When the market's showing indecision, we don't want to be trying to make bold predictions. We're trend followers, we're not trend setters. So we want to be able to see where that trend is developing, where the direction of that trend is developing, and follow along. And right now, it's not giving us a real clear signal of what that direction is going to be. So we got to be a little bit more cautious. The breadth has picked up a little bit, though. We did move up into the high area. We were in trending, and we kind of moved up into the high area right here. That would tend to be a little bit more bullish for the market. But like I said, there's a lot of these mixed signals out there. We'll probably find a few that are indicating a little bit more of a bearish signal for the market. That's what's leading to this indecision. Sentiment has moved up a little bit as well. We're in the high area here, but nothing extreme. If we look at the buy-sell ratios, we're right at a possible crossing point, but they're also starting to move a little bit sideways right here. And so again, it's not showing anything extreme, but it's also not showing any strong direction. Sentiment is far from extreme. Usually when it gets up to that red line, it's signaling a little bit of an overbought market condition. We're not there. We're not down at the lower extreme either. Right in the middle, just not giving us a real clear direction there. Let's take a look at the charts. So, by the way, the training today that we're going to be going over after the market update is going to be on. I guess it's a good topic to be talking about, but it's looking at what we call Doji candles. Doji is a Japanese name. Basically, Dojis reflect indecision, and that's why I was laughing a little bit, because here I've been talking about indecision in the market, and actually there are some Dojis that are showing up on the indexes. So that'll be, I guess it's a good time to be talking about them. But that'll be the training that we'll be going over after I get done with the update. Let's move over to the charts here. Let's take a look at the S&P 500. And again, I go back to the basic stair-step concept of charts, that typically stocks will rotate between what we call impulsive moves, which is a directional move. That direction could be up or down, and a corrective move, which tends to be a little bit more choppy, a little bit more sideways. And when you're in an uptrend, you get impulsive moves are up. The corrective moves tend to be down but sideways, and they kind of form those steps within the stair step. Very often when you get trend reversals, you get back-to-back impulsive moves in the opposite direction. You get impulsive up, impulsive down, and then in the downtrend, you start alternating between impulsive and corrective. You get impulsive down, corrective as it tries to rally back up a little bit, tends to be more choppy, more sideways, followed by impulsive down. When you get down to the bottom of a downtrend, very often you'll get impulsive down, followed by impulsive up. That back-to-back impulsive moves in the opposite direction. And the pattern kind of continues. Now, that's the basic concept. Obviously, the market isn't going to move exactly according to that concept, but it's important to understand the concept, because that's how we're able to kind of read what's going on with these trends and what's going on with these charts. What's thrown us for a little bit of a loop, though, is we've had a few impulsive moves in opposite directions that weren't followed by corrective moves. We had impulsive move up. We had this impulsive move down. Typically, that would signal a trend reversal to the downside. but then we had impulsive up. We've had 2 days where we went up. That was 2 days last week where we went up sharply there, Thursday and Friday. So it, you know, are we in a downtrend? Is this a lower high and we're going to be dropping into another impulsive move down, or is this just a quick drop? Sometimes you'll get these little just quick drops and then it'll take off again. But most of the time, you don't get a straight move down followed by a straight move up. It tends to be a little bit more choppy. You'll get this. Here's a sharp move down. It tried to rally that day, had a little bit of a bounce right here, and then it had another move down. We didn't get that here. It just went straight down, straight up. Now, we have been moving sideways the last couple of days. That's reflecting indecision. And we'll talk more about that the trading day, these tight candles. The market here is telling us it doesn't really know what direction to go in. It could be up, could be down. Now, normally we can look at indecision, and you know, one of the things you hear me talk about is a lot is whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to move in after it's done moving sideways, and this all fits in with that stair step concept that here's the indecision. Well, what was the direction before the indecision hit? It was up. Well, then typically when that indecision is resolved, it's usually going to be resolved to the upside, at least from a probability standpoint. You're more likely to continue upward out of that indecision. When you have that, when you've been stair stepping up and you have that impulsive move up followed by impulsive move down, and then you get a sideways, that indecision, well, that tends to be more probable that you're going to move lower after that indecision. The indecision is probably reflective of the fact that stock was moving up and that suddenly had the sharp move down, and everyone's trying to figure out, what does that mean? Does that mean that the trend is done? And usually that indecision resolves to the downside. You'll have another impulsive move down off of that. Well, we didn't get that in this sequence here. We didn't get that pause of indecision. We're getting it right now. So we could use this concept and say, okay, we're getting the indecision down now. The previous move was up. So you could make an argument that because of this indecision happening right here, that it's more likely that we're going to go higher out of this indecision. Now, by the way, when I talk about that concept, it doesn't mean that it doesn't mean the stock has to move far out of that indecision, meaning that you have the sideways move. It doesn't mean that there's a high probability that it'll move up out of this sideways range, but it might barely move up above it and then reverse sharply. It doesn't mean that it's going to carry the trend much higher from there. All that is saying is that when you have an impulsive move up followed by a corrective move, the higher probabilities that it will move higher. Now, again, I also need to make sure we understand that there's no absolutes in trading. So it doesn't absolutely mean it's got to move higher. I've seen plenty of patterns. Well, just like we're at right now, where I would make a conclusion that maybe the higher probability is that we'd go higher, and then suddenly you get this big drop. I mean, the markets are still free to do whatever they want, and if anything was absolute, we'd be gazillionaires because we'd never be wrong. And obviously we're going to be wrong at times. But that is, all I'm kind of going over is what I'm seeing, what we're seeing. Now, we could look at other indexes and see if they're giving a clue, a different view. Dow isn't helping much. It's pretty much the same one, if maybe even a little bit more drastic, had a more drastic move up, more a sharper move down, rally back up, and then we're getting indecision right here. Not really helping that very much. We can look at the NASDAQ 100. This one had been moving downward. You hear you've been stair stepping down. We did finally get a little bit of a relief rally last week, but then it's kind of moving sideways here. Could this be reversing into an uptrend? It's still early. Nothing's really clear right here. We can look at the Russell 2000. Now, the Russell 2000 has been moving higher. It isn't showing a real indecision. And the Russell 2000, we often look at the Russell 2000 as a little bit of a leadership index. It tends to move before, in a direction before the other indexes do. So could that be a clue that maybe we're more likely to go higher out of this? Well, it's looking that way, but there again, you know, it's like I said, with that back and forth that we saw over the last week or so, week and a half, I definitely wouldn't draw a strong conclusion that we're going to go higher out of this. But anyway, that's kind of what I'm seeing on the indexes there. If we move on to bonds are still, I think, trending down. This is a little bit more of a sideways move right here we've seen recently in bonds, but the previous move was down. Here was the impulsive move down. So I would assume that when this is done moving sideways, that we should have another move down in bonds. We want to keep a close eye on this previous low right here. If we're in this downtrend, we should go below that low, go to a lower low overall. You see the larger trend here, larger move down, larger step. We should go to a larger move down with another lower low. If it fails to go below there and starts kind of moving above these highs right here, then you could be looking like we could possibly be in a trend reversal back up. But I just don't see that in bonds right now, at least in the near term. It looks like those the yields are more likely to move higher than come down, especially with the inflation worries. So we would assume that bonds are going to continue to trend down, and that's what they're acting like right now. Acting like they're wanting to move lower. Gold, you know, I mentioned last week, or actually for the last couple of weeks, that gold was looking a lot more bullish, and it's been acting that way. Remember, we were waiting for it to kind of clear this previous lower high right here. That was the lower high in the downtrend. It started to kind of stair step up through here, but to really get confidence that you're in the trend reversal, you want it to move above that, and it did recently. Pulled back right here, had a little bit of a pause, so you can see the stair step on the move up in gold had impulsive. This is more corrective, more sideways, impulsive, more corrective and sideways, impulsive, more corrective and sideways, impulsive. Now we have a little bit of an indecision day today, a little bit of a weak price action, but that could mean that it just might be ready to pull back a little bit like it did right here. As far as what would indicate a possible trend reversal in gold to go back down, you keep an eye on this previous higher low right here. That was the last higher low that we've had. We've now gone to a higher high. If it starts to sell off and moves down below that low, especially in a sharp way where you have impulsive up, impulsive down, it would start to behave like it's reversing trend. But I don't see that right now. Right now, it looks like gold is in an uptrend. And one thing that's a little bit different about commodities, particularly gold and silver, is when they become overbought, they tend to stay overbought for long periods, meaning we are in extreme reversal risk range right here. We're not at the far right side, but even then, even if we're on the far right side, sometimes when gold really gets going, it gets going, and it can stay really overbought for a while. And so to assume that just because we're in the extreme reversal risk range, that gold is going to reverse the trend or could reverse the trend, not necessarily. Like I said, there is a little bit of a weak price action today that could indicate a little bit of a pullback, but overall, gold is still acting like it wants to move higher. And that fits in a little bit with the inflation trade as well. Gold tends to rally in periods of inflation. And so that that's another reason to be a little bit more bullish on gold, at least in the near term here. Oil's it looks like it's kind of forming a little bit of a cup with handle formation. Here's your kind of cup, and then the handle is when it starts to move sideways right near the breakout area right here. Now, we could continue to move sideways for a period of time. Today's price action is a little bit more bearish the way it's trading. Maybe it just means it's going to move to the lower part of the handle range or something like that. But ultimately, this pattern should break out to the upside, and we should see a good move up in oil when this resolves. So I'm still bullish on oil, but sometimes. But there again, here's this period of indecision. It's moving sideways. It's telling you that traders are trying to determine whether they think oil is going to break out or break down. Overall, though, with that cup with handle pattern, it should, most times it's going to resolve to the upside, break out to the upside off of that. And so, if you're looking at oil trades, you might want to wait for it to break out first. It saves you from, waiting a few weeks or so if it continues to move sideways, and parking your money in a sideways trend. It's not too fun to wake up every day and haven't gone anywhere. You're just sitting there. But that looks like it should break out to the upside. The dollar continues to move lower. Today we've taken out this previous low right here. Now we do have a little bit of a bullish reversal candle today because we opened lower. We're trading higher for the day, but still lower than the day before. Something similar happened right in here, and you got a little bit of a pop. And it could, we have an impulsive move down. We could be going into a little bit of a correction where it's moving a little bit sideways or tries to rally a little bit. These little steps. So we'll see if we get a little bit of a bounce. We could get a little bit of a bounce in the dollar, but overall the trend is down, and we're going to assume that trend is going to continue until it changes. What would be a signal of a possible trend reversal? Well, here's a lower high right here. Here's a lower low right there. Here's a lower low right here. If it rallied up, it went to a higher high. Maybe pulled back and gave you a higher low. It could be a possible trend reversal, but it's not acting that way right now. And so we're assuming that trend is just going to continue to the downside. And then the VIX, again, this isn't helping too much either, where, we had this sharp move down when the market moved up. And then we had that drop last week. It really spiked the VIX up right there. But remember what I talked about last week when that happened. There's something weird about that sell-off. Even though we saw the VIX spike up a little bit, there just wasn't the volume behind the selling that would indicate that there was a lot of fear. Now we do try to look at the VIX to read fear, because that is a reflection of those big institutional traders buying protected puts. They don't buy those protected puts unless they're worried about things dropping further. And the headline news was it. That was when we got that big inflation news that kind of freaked everybody out. But then it quickly reversed. We saw the VIX come way down on Thursday and Friday. It's been a little bit sideways right through here. But it's hard to tell if this is, because sometimes what will happen is you'll get a spike. Here's an example. You got a little bit of a spike in the VIX right there, and then it came back down again, and it was kind of a warning sign of what was to come. Then you get a bigger spike up through here. Is this a warning sign that we're building towards another sell-off or something like that? I don't know. We'll have to see. Like I said, I'm not seeing that on the charts yet or anything, but it's kind of unusual to see that type of movement in the VIX. So VIX isn't helping us either to determine if any big move is signaling any big move that's coming. All right, so that's kind of the conditions we're in then. An indecisive market. I'm going to go over a few trades from our sectors, but just always keep that in mind. One of the reasons why we look at the market conditions first is we're analyzing the probability of the potential trades that we're looking to get into. Now, You can almost always find a trade every day, but that doesn't necessarily mean that you should be making that trade every day or making trades. And since we're looking for confirmation on a lot of these trades anyway, I don't mind going over a few, because it's not like I'm saying these are ready to go right now. You'd want them to go back to the buy signal. Now, in the process that we go through with these specific stocks that we look at in class, they are based off of I'm talking to those that are kind of new to the process here. We're looking for stocks that are in the stronger sectors. What are the stronger sectors right now? What are the ones that are outperforming other sectors? And then what are the stronger stocks within those sectors, individual stocks within those sectors that haven't already made their move yet? So we're going to be looking at, we're going to go under the sectors tab right here. Oh, by the way, if we look at index, I was going to go over the indexes here. If you go over the indexes right here, you can also see that we don't have any extreme ratios either. Usually you'll get double-digit ratios, 10 to 1, 20 to 1, or something like that, buys to sells. This is very low ratios right here, so this is indicating the market is not, it still could rally off of this, and we're not in any sort of overbought condition where we'd really be concerned that a big sell-off is imminent. Let's go into the sectors here. So this is ranking all the sectors. So the top sector right now is transportation, all by basic materials, industrial products, retail. And so we're looking at trying to find stocks within those sectors that are outperforming. We're also going to go into the hold section right here because we want to find stocks that haven't kind of broken out yet, look like they could be close to breaking out, so that we can take advantage of them. Doesn't mean we can't find stocks in the buy section or that the buy section can't keep going higher. And I definitely jump in here sometimes to take a look, see if there's any patterns I might have missed that maybe have barely gone to a buy signal, might be ready to go right now. But these we're looking for a hold signal, and then we're trying to find a 98 strength rank. Right now, we haven't seen a lot of 98 strength rank stocks in these sectors. Under transportation right here, this top one right here, DAC, is a 98 strength rank. So we're trying to get close to that 98 strength rank. I will dip down a little bit if I don't find anything I like in the 98 strength rank. I'll move down to 97, 96, because as long as the chart pattern looks good and I'm in a 90 strength rank area, I still like the trades. I don't like to dip down below 90, but it depends, because some of these sectors, they just don't typically have high strength rank stocks anyway. And so, but if they have a nice chart pattern and they're ranked in the top of that sector, then sometimes I'll take a chance on those and trade those. Now, although this had a 98 strength rank, this DAC, I didn't like the chart pattern as much on it. Let me pull it up here, because you have that impulsive up, impulsive down behavior there. If it would have been looking a little more like this, where you had impulsive up and then you had the sideways corrective type look to it, I would have liked it. But this worries me that maybe it's in a trend reversal. It may not be. We just saw with the rest of the market that it could mean that this is just a quick sell-off right here, and it could work its way back to a higher high. But again, I try to be disciplined and stick to the probabilities. I try not to look at what could possibly happen. I try to look at what is more likely to happen. What's the probability? Because anything is possible. Any chart pattern can be possible, and you can talk yourself into any trade if you let yourself talk yourself into any trade. So you got to be real disciplined when it comes to kind of following your what you like, what you're looking for, what gives you the highest probability highest probability outcome. and then being disciplined. Sometimes the best decision, when you're not seeing anything real clear, the best decision is to wait because things will become more clear. And you don't want to be doing a lot of trading when things are not real clear. All right, let's go back and look at the next one. Oh, no, let's go down a little bit. I like this ANTE, 93 strength rank. Hold on. That's a 93 strength rank. Oh, let me switch this to signals too. Here we go. Oh, it looks like it's going to a buy signal today. But what I like is it looks like it's forming. It's pulled back off the highs here, but it looks like it's forming an inverse or upside down head and shoulders pattern. Here's your head. Here's your left shoulder. Here's your right shoulder. And here's your neckline right here. If it breaks that neckline, you can take the distance from the neckline to the base of the head, project that distance upward, and it gives you kind of a minimum target of where to expect this thing to go. You also have a little bit of resistance right here in that same area, so I'd expect it to get up into this area right here if it breaks out. Now, with the, it did give a buy signal today. We do usually look to, if we find the pattern and the strength rank we like, the next signal would be to get in on the next buy signal. In a situation like this, though, where there's indecision in the market and you're close to your breakout area, you might want to consider wait for it to break out. The pattern is suggesting still a pretty decent move once it breaks out. That would give you a little bit of more confidence that reversal from this downtrend is underway. But I like that pattern that's developing there. That's usually a pretty bullish pattern that's forming. The next sector, let's go down to basic materials under the hold section here. And I'm going to go down to this RFP, Resolute Forest Products. I think I've gone over this one before. 97 strength rank. And I think when I went over it before, we were looking at this triangle formation here, this symmetrical triangle formation. We're just waiting for it to break out. We're hoping it breaks out to the upside right here. But this is another one that it may, if it rallies up, it may go back to a buy signal before it breaks out. But you might want to wait for it to break out of that triangle. And this works very similar to that head and shoulders pattern. You can take the base, if it does break out above here, you can take the base of the triangle, which is this move right here, and project that distance from the breakout point. These aren't things I'm making up. This is stuff that any technical trader knows. Over time, they learn these little kind of patterns that tend to develop. But now these are minimum targets. It doesn't mean it has to go that distance to stop, or it may be shorter than that distance. But like I said, something doesn't become a rule of thumb if it only happens occasionally. It happens enough times where there's confidence that it should move that far. It doesn't mean it'll move that far immediately. It could move up a little bit, pull back, stair step its way up to that area. And then lastly, let's go under industrial products. Third on the list there under the hold section. Now this one isn't quite ready yet, but I've liked the stock, and I still think it's has upside potential. The problem is that it performed when there was a little bit more of a risk-on feeling in the market back in the end of the year, November, December. Since then, a lot of these stocks, this is related to the electric vehicle infrastructure that's being talked about. Now, I think there's going to be a big consolidation. People look at the electric vehicle industry right now. There's so many of these little small companies that are out there, very similar to what it was when the automobile industry started. Lots of small automobile companies. Well, what happened out of that? Well, we ended up with GM, Ford, and a handful of other, just there weren't as many individual companies that survived out of that period. There's consolidations and mergers and acquisitions and companies going under because their products weren't good enough. And we're going to see that in the electric vehicle industry as well. But I like this plug power right here. It's a 96 strength rank. It's recently been in a sell, and it's been in this downtrend. It's been stair stepping down. So this is just one I'm going to put on the radar here because we've had a decent move up right here. Now it could be just that step for another move down. But I want to use this as just kind of a teaching tool here of what I tend to look for. I'm not going to go buy this thing just because it's possible that this could be the bottom, because it was possible that was the bottom. It was possible that was the bottom, and it wasn't. It kept going lower. But the pattern is lower highs, lower lows. We've been seeing lower highs, lower lows. That's the pattern of a downtrend. We've recently had a lower low right here. It's starting to move up. This is going to be critical right here. If it can break out, we're not too far away from that. If it can break out, has had a nice move up today in a market that's been indecisive. It's had a solid up day today. If it could break out above here and go to a higher high, that's the first signal of a possible trend reversal. Now, sometimes you'll go to a higher high and it doesn't matter, or reverse right back down into it doesn't guarantee that you're reversing trend, but that's a little bit more confidence. Now I feel like I'm not guessing that the downtrend is done, right? There's a little bit more evidence there that the downtrend could be done, right? A little bit stronger would be to wait for that first pullback after it goes to a higher high. I think it runs up here a little bit and then it pulls back. So you get that higher high, but it pull back a little bit, and then if it starts to move back up again, now you've got your higher low. Now it's acting like an uptrend. And there's a little bit more confidence that you're dealing with a trend reversal at that point. Now, obviously, more confidence would be if it then rallied up and went to another higher high. But you can see the stages. How much confirmation are you looking for, to make a decision? I could wait until it's all the way up after it stair step many times. Say, oh, now it's clearly acting like an uptrend. But that uptrend might be done at that point when I finally have confidence that it's in an uptrend. So you're looking for these clues, and it's just a matter of how many clues you want that's going to give you the most confidence. But I wanted to point that out because this is getting close. It's getting close to maybe going to a higher high. It's had a deep pullback here, and so if it does start to build momentum again, there's a lot of upside potential. It could work its way all the way back up to that $70 range again. Eventually. But anyway, I thought I just wanted to use that as kind of a little bit of a teaching tool of what I kind of look for. Still has a high strength rank, but a lot of that high strength rank came from this sharp run up right here in such a short period of time. All right, let's jump into the training for today. I went a little bit longer in the update. Usually I try to keep it to a half hour, but I knew that the training is going to be pretty basic today, pretty easy it's not going to take up a lot of time. But what we wanted to do is spend more time on these candlestick formations, each of these candlestick formations, because they are such a big driver in reading price action. When I talk about reading price action, it comes down to these different candlestick formations. Now, remember what I always tell you, though, candlestick formations are very short term. They're just telling you what's kind of going on right now. They're not meant to be longer term predictors of what's going to happen next. But if you can combine the near term price action with a longer term chart that's forming and a longer term predictor, it can help you with timing. I have a chart that is very bullish. It have price action today that's very bullish. It could mean that stock's getting ready to take off today, and that's where it can be very valuable. Or, I've been in this trade for a while. I've had all these profits, the price action is acting pretty weak. I'm already near my target area to get out. Now the price action is acting very weak. Maybe that's a signal I should go ahead and get out right now. And I'm probably as close to the top as I'm going to get. It can help you in these decisions when you know how to read this stuff. The topic for today is going to be what we call dojis. Dojis, and I'm going to add spinning tops in there as well, because spinning tops they're meaning the same thing. A doji is a very a pure doji is when you have a stock that opens. Here's where it opened. It traded up a little bit during the day. It traded down a little bit during the day, and then it closed right where it opened, the exact same price. That's called a doji. It's basically a reflection of indecision. Now, how could that be valuable? Well, you have a stock that's been going up, nice big candles going up, going up, going up, and then you get a doji right here. Well, that's telling you there's indecision. Now, what would be the indecision? Well, what it's telling you is boy, the buyers were confident through here, right? They were willing to buy at higher prices and push that price up. Now that indecision is telling you that maybe they're wondering, is it gone too far? I don't want to pay. That's getting a little expensive. I don't know if I want to pay that price. Should I sell some of my position? The buying and selling decisions. There's indecision on what they should do. Now, what's very key with these indecision candles is they could be a reflection of a trend reversal. You could see that there's indecision, and then suddenly the stock starts to come back down. But there could just be a day of indecision, and then the buyer's like, no, this thing's going higher, and it could take off again. So it's very important with these indecision days that you don't assume a trend reversal. You don't assume a trend continuation off them. They always need confirmation. You have to see what happens next. So if I see a stock moving up like this, and then I see that indecision day, and I think, oh boy, that trend is done, I want to short this stock. No, you need to wait for confirmation. You need to wait for that down day, and then that'd be a good signal to short the stock. If you felt like it was going to come back down off of that, if that wasn't a trend reversal, that indecision was followed by a trend reversal. Okay. I sometimes use indecision days when I'm close to my target to get out. If I'm already in an area where I think I've had enough profit, and then I start to see some indecision candles start forming, I might decide to maybe not get out of the whole position, but maybe I take some profits off the table in case it reverses sharply. So there are decisions you can make based off of that, but it's important to know really what we want to focus on is what is that telling us? It's telling us there's now indecision amongst the traders, the trading population. Now, who are the traders? It's everybody, every institutional traders, retail traders. The price action, the price of this movement is telling you what's going on. Now, I would say that there's a stronger emphasis on institutional traders. They're the ones that really move the market. So when I see a market move strongly like this and then see indecision, I'm assuming the institutional traders are having some indecision here. But it is a reflection of all traders, everyone that's trading in the instrument. Now, obviously, you're not always going to be closing exactly where you open, so there is some variations to the doji. You could close slightly. You could have opened, let me erase some of the stuff. You could have opened right here, traded up a little bit, down a little bit, and closed a little bit lower than where you opened. That's why you have a little bit of a black body right here. Or you could have opened down here, traded up as high as this, traded as low as this, and closed up a little higher. It really doesn't matter, though, because even if you close a little higher or close a little lower, it's still a reflection of indecision. It's not a strong, that doesn't give you a lot of confidence when you see that type of price action. Now, a similar pattern to this would be the spinning top. You can see it's basically the same thing, except you have a little bit of a body. It's real small. The key is that the body should be very small. And the reason why this is pretty obvious why they call it a spinning top. I don't know if people use those spinning tops anymore, but you remember as kids, you spin the top of it and the bottom of it is on the floor and it spins. Think of if you've seen the movie Inception, he had that spinning top that he used to. Anyway, I won't get into that, but this would be obviously with this white body right here. It's assuming that we open down here. At some point in the day, we traded up here. Some point in the day, we traded down here. We closed a little bit higher than where we opened. But again, it's very compact. This would assume that the opposite opened up here, traded up and down, and then closed a little bit lower. Now, as we go through these examples, I'm going to try to show you examples of where they did signal a reversal, but I'll also try to show you where it didn't reverse it, just so you understand that it could just be a pause within a trend or a pause within a move. I want to start off with looking at the indexes here. So yesterday was a little bit of a doji, and today is a very small body right there. Both these days are indicating indecision. So we've had this sharp move down, a sharp move up, and then it looks like traders are trying to figure out, well, what does this mean? And I know, because that's what I've been trying to figure out yesterday and today, is what direction does this mean? That's reflecting that indecision. But see, this is what's important here then is, I might see a chart that I absolutely love. Oh boy, this chart really looks like it's going higher. But a lot of times you need the indexes to help you push that stock higher. If the indexes are reflecting indecision, sometimes I might make the decision that maybe I'll wait on that stock. I like the pattern on it, but maybe I'll wait until I see a little bit more help from the indexes. Now, you don't always have to have the indexes moving in the same directions as stocks you're trading, but you try to as much as possible, because especially in downward moves, when the market sells off, there's a tendency for most of the stocks to sell off with it. It's not that is always that way in upward markets. When the market's up, there could be a lot of stocks that are down, and there are some stocks that are up when the market is down. But when it's down big, you'll see. That's why they always see on CNBC. They'll show you the sea of red on their heat map, where almost every S&P 500 stock is down or something like that. But you like to try to have momentum from the market as well as match up with the individual stock you're looking at. I'm not saying that is the case every time, though. I mean, I could still like the chart, but at least I'm reading the indecision in the index. So I'm saying, okay, I still like this chart. I'm going to get in, but I'm recognizing that the index is showing me indecision. It's not real confident of the next move. I guess a better way to put it is you're once you learn what you're looking at, you can make informed decisions. You know if the environment's a little bit riskier to get into that trade, but you're willing to take that risk. I used to always joke that when I was starting out, everyone, you talk about how are you successful in things in life, and I used to always hear from these great leaders that, well, you got to learn how to take calculated risks. And I read a lot of books and biographies on great leaders, and they always said, you got to take calculated risks. Got to take calculated risks. I remember one day after reading this for the 100th time, I sat back and said, well, how do you calculate the risk? They tell you that you got to take calculated risk, but nobody's telling me how to calculate the risk. And so when I became an instructor, obviously the key to success in trading is you got to learn to take calculated risks, right? So when I became an instructor, I became kind of obsessed with trying to explain how to calculate risk, because that was something that was always frustrating for me, is nobody seemed to tell me how to do it. And that's what I'm trying to do in these trainings is how do you calculate the risk? How do I know if the trade I'm getting into right now is a little bit riskier today than it was yesterday, or vice versa? I'm okay with taking the risk if I know, if I kind of have a feel of what the probabilities are. If I feel like it's just a coin flip, I'm going to buy this thing and hopefully it goes up or hopefully it goes down. And that's a dangerous way to go about trading. So, but you can see here was some indecision right here. So here's a little bit of a move up. You had a strong move right there, and then had a little bit of an indecision day right there. Pulled back a little bit, moved up again. Here's a little bit of an indecision day. It did move higher from that, but then it started to move sideways too. It had a really sharp move up through here. But you can see, there's lots of indecision days. There's a doji right there. It had been moving up. It didn't mean it was going to reverse and move down. You got to see what happens the next day. It moved higher. Now it moved higher and then kind of flattened out, pulled back later. Maybe some of that indecision was reflecting that, you had 2 indecision days right there. Maybe that's reflecting that this upward move may not have as much momentum as it needs to have to move higher. So again, today's lesson isn't the most exciting because it's not like I'm showing, like with the reversal candles that we went over the last few classes, that they're showing a high potential of a reversal. And you see, usually when you see that pattern, you see some sort of reversal. So those are a little bit more exciting. We're talking about indecision, an indecision candle that's not necessarily predicting a high probability move. It's not as exciting to learn about, but it's important to understand. It's important to recognize, so that I don't see an indecision candle here and say, oh, I don't care about that. I believe the stock is going to take off and go higher. Well, you might be right, but the smart money, the big institutional traders that typically are the main force in forming this price formations, they're not real confident, as reflected in the price action. So why are you so confident? Are you thinking you're smarter than them? And even if you are smarter than them, you remember, even if you can't outsmart the institutional traders, you can't move the market with your 100 shares that you're going to buy. You need them to move the market. And so we don't want to get into a habit of trying to think we're smarter than everybody else. We want to get in the habit of being good at following everybody else, being able to recognize what those big institutional traders are doing and trying to follow what they're doing. Because that's the only way we're going to make big money, because we can't move the markets with our 100 shares that we buy. But as an exercise of this, you can go in and just pull up, go through the Dow stocks. You can go through. You can see, again, the spinning top would be when you have a little bit of a body to it. There's a spinning top right there, spinning top right here. Now here's one that was a reversal. It went up, it had a spinning top, moved down. There's a spinning top right there. After the move down, it went right back up again. Here was an upward move, had a spinning top, but the confirmation the next day was it shook that off. It wants to go higher, and it did go higher. There was a downward move that had a spinning top, kept moving down ultimately. There's a spinning top up here. Spinning tops are going to be more common because it is pretty rare to have an opening and closing price, right? This is more of a doji right here. This is very close to opening and closing at the same spot. But I mean, again, you can just see it here. Here's where it opened. It moved all the way up here. It moved all the way down here, and then it closed right where it opened. I mean, there's no clearer signal of, I don't know where this thing's going. I don't know what I should be doing, buying or selling. It's just showing you that right here visually, and so you got to be able to recognize that. Here's a little bit of spinning top right here. Here's one right here. Now, there are other variations out of this as well that can draw a little bit stronger conclusions. You get into hammer formations, and we're going to be getting into some of those as well. We'll spend some time on each of these. And that's another thing with candlestick formations and reading price action again, is just in that behavior, being able to read that the high and low of the day and where we opened, where we closed, can tell you there's a stronger probability for a reversal or not a stronger probability. The basic, obviously the basic doji and spinning top is not a strong indicator of continuation or reversal, but variations of it can increase those probabilities, and we're going to learn about those in some of the upcoming classes as well. But it's kind of an exercise. Try doing that. Go, and it doesn't have to be the Dow stocks. Go through any stocks, and go through stocks that you're following right now, and just see if you can start to recognize that, see that. The key is to be able to recognize it immediately and have it be kind of automatic. It's where as soon as that chart pops up and you see that kind of doji formation, like, oh, it's not a strong day today. It's not a strong, there's not a strong indication of what that stock's going to do based on what it's doing today, how it's trading today. All right, that's it. Have a great rest of the week. We'll see you on Thursday for the stock specific class. Bye, everyone.